One of the questions we're asked quite frequently at quantum trading is a very simple one, and it's how to use the quantum trading currency dashboard. And if you're not familiar with the currency dashboard, it's composed of 4 indicators. We have the currency strength indicator, the currency matrix, the currency array, and the currency heat map. So in this video, I just want to walk you through what we call the 3 simple steps really to highlight and identify those candidates for trading opportunities in the currency world. And the starting point for step 1 is the currency strength indicator. And the reason for that is very simple. The currency strength indicator breaks this complex market of relationships between currencies and currency pairs down into the individual components, the building blocks of the market itself, in other words, the individual currencies. And that's the starting point because it's a process of deconstruction and reconstruction. We're breaking the market down, this very complex arrangement, into these very simple currencies, so we isolate them out in a way, and then from there we start the rebuilding process of really trying to identify those currency pairs that we want to look at and consider as opportunities to trade. Now I've got this on a 15-minute time frame. I've got single time frames for all this example, but of course a multi-time frame approach is the de facto standard for all your trading, whether it's for indicators or whether it's for charts. So you will always have a multiple time frame opportunity or options available. You'll be considering these across the time horizons for the simple reason that what happens in a fastest time frame will ripple through to the slowest time frame if it is a strong trend. It's as simple as that. Now, as we can see here on the currency strength indicator, this yellow line, the British pound, we've seen some very strong buying in the pound throughout this session, and it's now quite strongly overbought, but we've had this very strong buying which has continued for some time now. In addition to that, we've seen strong buying in the euro, this orange line. So these two are now very much in the overbought area, but with very strong bullish momentum. In other words, lots of buying that is reflected in the strength of the currency strength indicator. Equally to the downside, we've got pretty strong selling, particularly on this red line, the US dollar, which is now moving into the oversold region. Similarly, we've got the Canadian dollar down here. We've seen strong selling in that too. So the currency strength indicator isolates out. It tells you instantly where you're seeing either strong buying or where you're seeing strong selling. And it also, in addition to that, it will also tell you instantly where you're seeing currencies which are perhaps in a congestion phase. For example, this blue line, the Aussie dollar, it's been flip-flopping around. It's not really going anywhere at the moment. There's no strong bias, if you will, to the upside or the downside for the Aussie dollar right now in this time horizon. But that's certainly not the case for the British pound, which is the one I've really concentrated on for the purposes of this video. So that's step 1. It's really highlighting the currency that you want to pay attention to and will potentially deliver some excellent trading opportunities for you. The next step is to move to the currency matrix, which I've got on this tab here. Again, we're on a 15-minute time horizon. And as you can see here, I've isolated out. You can isolate out with the currency, with the icons to the right here. You can isolate out the currency that is of interest. And here we've got the British pound isolated out into the pound complex. So we've moved from the currency itself into the complex associated with that particular currency. So in other words, the 7 currency pairs. And what we're looking at here is sentiment, because trading is all about risk. And if we're trading in a pound pair, we want to know whether sentiment in the market is universally aligned with the direction that we are trading. Think of it as a river, if you will, a river of sentiment. You want to be paddling your canoe in the same direction as everybody else. So if the torrent is moving in one direction, that's the direction you want to be going in. On occasion, you may trade against that particular flow, but you need to be aware of it. And that's what the currency matrix does. It reveals that for you. Now, what's obvious and clear here is that we have a perfect array, if you will, of the pairs, because we've got all 6 here ranked at the top. So we know that we've got universal buying of the pound because these are all stacked through 1 to 6. Down at the bottom here, equally, because the pound is the counter currency in the euro-pound pair, we've got the euro-pound at the bottom. So we have a full house, to use a card analogy, on this time horizon. So strength in the pound, it is being bought universally across the market in all these pairs. And if we are trading a pound pair, that's what we need to know, because we need to understand that, because the risk on that trading opportunity will be lower. It has to be, because everyone else is buying the pound right now. If we were trading in isolation against the universal flow, it would be a much higher risk trading proposition, because everyone else is in the opposite direction. Now, on occasion, you may wish to take that trade on, but it is a much higher risk proposition than if you're trading with the universal sentiment. And that is what the currency matrix does. It does it in all time frames, from 1 minute right the way through to 1 month. And it's constantly ranking and re-ranking these pairs as the price action dictates. As I say, you can also isolate out the counter currency if, for example, you were considering cable as an opportunity right now to jump on that trend. What you'd also want to know, you'd isolate out on the dollar here just to see if that pair was also being driven by dollar weakness. Now, we know from the currency strength indicator that is the case, because the dollar was being sold equally strongly in counterbalance to the pound, which was being bought strongly. And that's the ideal combination that you want, because that pair will move the most strongest, because it's being driven by strength on one side and weakness on the other. So that's step 2. Step 3 is we move to the next indicator in the suite on the currency dashboard, which is the currency array. And once again, you can see we have a full house. We have a perfect array of the pound pairs at the top here and the euro pound at the bottom. So this is really confirming it. But what the array also does is it tells you the strength of buying in that particular pair. The strongest buying is in the pound dollar right now. We've also got the pound CAD up here. It's a little bit weaker in the pound New Zealand and the pound Aussie. So those may be pairs that could be moving up to join these other two at the extremes. And the inclination of the line will give you that instant heads up as to how strong that trend is in that particular pair that you may be considering. Now, as I say, these may be coming up here to join it. You can think of these like a sweeping radar or a windscreen wiper on a car. These oscillate through back down to over to the underside, to the bearish side of the market, and back up to the bullish side. So you'll see them sweeping around. It's a very elegant, it's a very intuitive indicator, but what it really tells you is about the strength of momentum. Without looking at a price chart, you know instantly we've got a strong trend on the pound dollar, a strong trend on pound CAD, equally on pound yen, pound Swiss, slightly less so on pound Aussie, pound New Zealand, but we've got a very strong bearish trend on euro pound down at the bottom here. Now, in addition to that, what the currency array also gives you, it gives you signals as to potential overbought and oversold conditions developing. Where the currency pair is potentially overbought, you get the bright color with the OB, overbought signal attached. Where a currency pair is potentially moving to that position, it is the darker color, and you see the brackets around the OB. And equally down at the other extreme of the oversold, when a currency pair is moving to that condition, it's the darker red with the brackets around. And when it's actually arriving at that potential situation, then it changes to bright red. But I use the word potential because these are just indicative indications of where a currency pair is arriving at. And it is down to you to then go and check that on the chart, to analyze the volume price relationship, to analyze support and resistance, to look at it in multiple time frames, to use your other indicators to help you make that judgment call as to whether you want to take that reversal trade perhaps, or whether you want to wait for that reversal to develop, if it does develop, and then jump on a trend maybe in the opposite direction. So that is the currency array. And again, as with the other indicators, you can isolate out all the pairs down here on these little currency icons. And finally, we come to the currency heat map. And what the currency heat map does is it really encapsulates all this information on a single indicator. it negates the need for multiple screens, multiple monitors, because what it's giving you is all that bullish and bearish sentiment across the various time frames. So you can look across here at pound Aussie. It's pretty bullish. We've got a little bit of bearish on 5 minute here, but generally speaking, it's bullish right the way out to the hourly, the 4 hourly, a little bit of bearish sentiment on the daily, but very bullish on the weekly and the monthly. So if you were looking at that chart, certainly on the slower time frames, you see a pretty strongly bullish chart. Equally, the pound yen, we've got a little bit of bearish sentiment coming in here, but it's still bullish on the faster time frames, and certainly out into this mid-range here, right the way almost out to the weekly. Monthly is still a little bit bearish over here. So you're seeing all that information coming in real time. It's giving you an instant heads up. And what you're looking for here, several things. First of all, obviously the broad sentiment to the pair looking across the time horizons, but also if we go down to the bottom here, where you're seeing changes in sentiment from bearish to bullish. For example, on the euro pound, you're seeing a little bit of bullish sentiment coming on the 5 minute. Now that may well have come through from the 1 minute. And if that is to filter through, then what you might expect to see is this cell go green. This one's already green. Perhaps that's going to filter through to the 10. So perhaps you're starting to see the development of a reversal being created in the faster time frames. Obviously, that is not going to affect what is going on out here on the slower time frames. But if you're a reversal trader on an intraday basis, that is certainly information you'd want to know, and perhaps take an opportunity to the opposite direction of the trade. And finally, the ranking ladder here on the left-hand side. What this ranking ladder does is very different to the ranking ladder on the currency matrix and the currency array, because this has a weighting aspect to it. If you think about this logically, you would not expect sentiment in a 1 minute time horizon to have the same impact and weight as in an hourly, for example, or in a daily. So what we've done on the ranking here is to actually take these time frames and weight them according to how slow or fast they are. The faster they are, the less significant. The slower they are, the greater the significance. So the weighting is according to the time horizon. And that's what delivers this ranking ladder to the left. So these pairs do not move up and down the ranking ladder as they do on the matrix and the array. They're literally moving in real time there, second by second. They are moving in real time, but they are weighted. So they're not going to move at the same speed. You've seen there the pound Aussie has just jumped. Now, it may move a spot or two during the day, but it's not going to move from one end of the ranking ladder to the other. So what this gives you is a slower term perspective on where those pairs are from the sort of hourly, 4 hour daily perspective, a much slower time horizon, if you will. And if you're trading those sorts of time frames, then it's an excellent way to look at the ranking ladder at the extremes, for example. Again, you're looking at it in much the same way as you would do on the currency strength indicator, where perhaps you're looking at currency pairs at an extreme, which may be getting to an overbought or oversold condition. So again, you would look at that, but you're looking at this as a much slower time frame. So if you're looking at this for the 4 hour and the daily perspective, for example, that's what you would be looking at. And maybe these will move up 1 or 2 slots in that sort of time frame. Maybe if you looked at this tomorrow, they've moved a couple of spaces. Maybe by the end of the week, 2 or 3 days later, they've moved 4 or 5 slots, depending on the strength of bearish or bullish sentiment towards that particular pair and how it's being driven. And of course, the 4 indicators are really there to guide you, to help you in your decision making. And from here, you then go to the charts and you start to analyze the charts from a technical perspective. You'll be looking at the fundamentals. You'll be looking at a volume price analysis perspective as your underlying methodology, I hope. And then on top of that, you'll also be using all your other indicators to help you frame and make that all important step into the market and take a position in the market. I hope you've enjoyed this particular video. Lots more to come as always. So thanks for watching and see you again soon, and bye for now.